Hi, I'm Michael Yardney, and just because you've taken the leap from homeowner to property investor doesn't actually mean your financial future is assured. In fact, it doesn't even mean that you're going to start making a profit in the short term or that you're on your way to building a sizable property portfolio. Unfortunately, the reality is that about 20% of those who get involved in property investment sell up in about the first year or so, and close to half sell their properties within the first 5 years. The statistics show those investors who end up staying in property, only less than 10% end up with more than 2 properties. So how do you ensure that you're going to avoid all the mistakes, those before you made, and become one of those few property investors who goes the distance and grows a property portfolio that generates real wealth? Well, I guess by now you know there's no shortcut to success, but the property road is well worth the scenery and the potholes if you stick around long enough and get to the good stuff. So I'm going to suggest you become a smart investor. Now that's an acronym. S stands for think strategically, M stands for manage your risks, A stands for invest against the grain, R stands for review your portfolio regularly, and T stands for work with the team. So you see, a smart investor thinks strategically. It's been said that failing to plan is a plan to fail. Savvy investors take this mantra seriously. They know exactly what they want to achieve and make sure their investment decisions work towards that goal. I guess instead of buying with their emotions or that lucrative offer that comes in the inbox or chasing the next hotspot, smart investors remain focused by sticking to a strategy with a proven long-term record. For a sophisticated investor to bite, each property they buy has to fulfill the criteria they've set for themselves through their chosen strategy and must get them one step closer to their end goal. They've got a strategy for choosing the right properties that relies on location, but it's framed by patience and timing. Now, this may take some of the excitement out of their investing, but I've often suggested not to look for excitement through property investment. Investing should be boring so that the rest of your life is exciting. Now, smart investors know that knowledge is power, and they work hard to educate themselves and stay on top of their game. They know their options for making a profit from real estate and can determine which properties are going to help them achieve their particular goals. M, a smart investor manages their risk. They know that a sound finance strategy is just as important as a sound property strategy. This firstly means don't over leverage, but more importantly it means having a sufficient financial buffer in your credit lines or offset accounts to see you through the ups and downs of property investing. Smart investors build in a cushion to cover the negative gearing costs, as well as managing their finances through the flat stages of the property cycle. And they also have an exit strategy in place in case their properties don't perform too well. They not only manage their financial risks when it comes to property, but they actually work at minimising their risks. How they do this is by seeking good advice about the best ownership structures for asset protection, and I guess to legally minimise their tax. They become financially fluent and understand all the ins and outs of taxation and the financial advantages that really running a true property investment can give them. And they ensure their investments are set up in the most efficient way. I guess they realise that it's not about how many properties you own that's important, as tempting as it may be to have a big property portfolio. They understand that at the end of the day, it's the size of their asset base and actually how hard their money works for them that's more important in the long run. With the words smart, the A stands for investing against the grain, because smart investors recognise that the property market moves in cycles and appreciate the power of counter-cyclical investing. I guess that means they don't often follow the crowd. They don't pay attention to the marketing hype of the overnight get-rich-quick property schemes, and they don't get caught up in the next hotspot to buy, even if everyone else seems to be flocking in that direction. Instead, smart investors are content sticking to a tried and true strategy, knowing the crowd's usually late to the party, and instead they study the macroeconomic fundamentals to understand where the property cycle is going, and they stay ahead of it or wait it out if need be. They also realise it's okay to stick to a niche in investing. You see, most people want to diversify, and in my mind that leads to averageness. Sophisticated investors know you're never going to become an expert by doing 100 different things once. They realise to become an expert, you've got to do the same thing 100 times, over and over again, until you can get reproducible results. The R in smart investors is they review their portfolio because they never rest on their laurels. What they do is they analyse the performance of their portfolio at least annually. They know there's more to successful investing than just buying a property and holding on to dear life, hoping that you're going to actually see it through. Each property in a savvy investor's portfolio undergoes a review. Once a year they look at things like, well, how's the property been performing over the past few years in terms of capital growth? They look at whether this property is likely to continue to outperform the averages over the next decade. Or maybe there's something you can do to improve your property and get a better return on your investments. They also look at what's happening in the local market where the property is, including any changes to the demographics of the suburb. And they consider whether it's worth riding out the slump or selling if the property market's not working too well or that particular property is not working too well for them. A smart investor doesn't become complacent. They keep learning, reading blogs and books and attending seminars. They want to improve their skills, they want to improve their knowledge. With the words smart, the T is they have a good team around them. They're only as good as their team. In fact, if they're the smartest person in their team, they're in trouble. They know they can't have all the answers. They don't have all the answers. So instead they surround themselves with successful, proven property investors. They don't try to wear all the hats of their investing business, and they employ a team of independent professionals to help them, including a property strategist, a finance strategist, an accountant, and a good solicitor. At the same time, smart investors are very cautious. They've got the experience to know that while many people seem to have well-meaning advice, people are always keen and they're itching to give you advice, aren't they? Smart investors only listen to those with the proven results. They've got long-term opinions. Successful investing can also mean avoiding salespeople. You've got to understand the difference between a salesperson and an advisor who's independent. You've got to understand who's representing you and who's representing the seller or the developer. And smart investors are prepared to pay for that advice. They don't cut corners to work with somebody who's cheap or free just for the sake of it. They're building their business under the guidance of smart advisors, a good team, ensuring they've got the best people in their business on their side. Now that you know what it takes, it's your turn to become a smart, S-M-A-R-T investor. That could give you that extra ability to succeed in the property game. If you'd like to get a good team around you, to be part of your team as a smart investor, why don't I have a chat with the team at Metropole? We're independent, we're unbiased, we've got a great track record with offices in Melbourne, Sydney and Brisbane. We'd love to have a chat with you about getting into property investment or reviewing your existing property portfolio.